Good afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Corum here and Ed Carson. And on today's show, we are going to be taking a little bit of a deeper dive into the market action that we saw this week and talk about your game plan for the week ahead, which might have some events happening. Not really sure, Ed. But and then we also have a couple of stocks that showed some strength today, despite the heavy losses. So, Ed, why don't you go ahead and kick us off with a daily chart of the NASDAQ on Thinkorswim so we can check out those candlesticks. Today, we did see the tech-heavy index decline 2.5%, while the S&P 500 was down 1.2%, and the Dow down 0.6%. So not a great way to cap off the week.
No, and it wasn't a great week. Talking about a deeper dive, that was what the market was this week.
Yeah.
And, you know, it's been that situation. When we started off last week and the week before that, okay, we had come down. All right, we're forming handles. This could be bullish. This could be nice. All right, we're coming down some more, but, you know, maybe we're really going to shake people out. We still held above the 21-day line. This is still fine. All we need is one good day, and we're still talking about it. But then we had 3 bad days, Monday, Wednesday, and Friday. And yeah, we had some rally, but it was very heavy where everything broke apart. All the major indexes through their 50-day lines, leading stocks. If the one, round tripping, breaking 50-day lines, just really, really negative action on top of a couple of weeks that weren't that great either.
That's right. And like you're saying, not only was the action for the major indexes pretty poor, but when you look underneath the surface, a lot of leading growth stocks plunging below once key support levels as well. And that further signals the health or lack thereof and the heightened uncertainty that we're experiencing right now in the market.
Yeah, I mean, there's a lot going on. Obviously, the coronavirus cases hitting new highs, we're having in the U.S. Lockdowns are returning in much of Europe, including France and Germany. It's not a positive situation. Some earnings, reaction to earnings weren't positive on a lot of these big names. The election is next week. So much going on. It's like either bad news or confusing news, and that is not a good mix for the market.
That's right. And we're going to take a look at a weekly chart now to underscore the really rough time that a lot of investors had in the market this week. You can just visually see very clearly how sharp the decline was. The sharpest weekly decline going back till March, Ed. So what does that signal to you?
Well, it really signals that it's breaking down. Oddly enough, it's like if we had had some of these days, you almost would have gotten a vertical violation feel if that is how it started. It wasn't quite like that, but we had sort of been just sort of like lobsters sort of slowly boiling in that pot. And then it just really, it hit a boil. All of a sudden, everybody, if you didn't feel it before, you really did. Hopefully you were getting out as maybe stocks were coming back in, taking profits before they went away, cutting losses short. But it's just definitely not positive action through this week.
Okay, also put this in the context of those regression channel lines for us, because clearly we are below that now. How concerned should investors be when it comes to that aspect?
The regression lines we started, and we're sort of used them as sort of quasi channel lines to sort of track the market rally. And, through here, it broke down. We were never really quite sure if the rally would reestablish itself, but it does seem like we have a character change. Once again, this was a character change. This may be even more so that, we're not going to return to those levels. We're coming well below it because we never really retested it, but we're decisively below it now, suggesting that these lines that we're going to maybe downshift, the positive side, maybe have a slower rally attempt, going forward. But we may, it definitely suggests a change in character that it may not be positive or fruitful for the next few weeks.
All right, and a couple of key levels to mention. The NASDAQ now below that 11,000 level. So the next floor of support that you would hope, since we're now also below the 50-day or 10-week line, would be the lows from September. But again, next week could bring with it some unexpected moves, but we're going to be prepared either which way, no matter what happens. But before we move on to some individual stocks, we do want to pivot over to MarketSmith so we can talk about the S&P 500 and Dow and how they fared this week. And I think it's pretty safe to say that they didn't fare better really, than the
No, they
NASDAQ.
did not. They did not. They might have done a little better today, but I think they were just as bad or worse for the week. The S&P was coming right towards its September lows here. It does on the NASDAQ, there's still room to go, but that's not a great
Yeah.
sign. And it's not necessarily clear that it's going to hold. Um, it's much further below the 50-day line. And the Dow looks even worse. It's trying to hold on to the 200-day line, and maybe it will, maybe it won't. But if you're looking at growth stocks, do you want your stocks falling to the 200-day line or waiting until the Nasdaq falls to the 200-day line? That would be pretty ugly. And that's why it's just not a positive situation. In 98% of the stocks.
Yeah, you got to be looking at those sell signals for your individual holdings. And with the market being under pressure this week, that is not the time to be aggressively buying stocks. We don't want to be catching a falling knife or bottom fishing or trying to call a bottom here. And like you've said, we need to not just have one strong day higher. We really need to see a change in character in order to feel a little more comfortable with the market conditions.
Yeah, we're seeing that people are going to discuss whether or not this is a correction or not. We've been a market under pressure, but when there's a correction, we have a follow through day, which is like a few days into a rally. But the point isn't about that. The point isn't about whether or not, in this case, with a follow through day, is that you don't just jump in on the first day. You wait a few days, and so the whole point is right now with this rally, even if we didn't call that, what you'd need is several days to feel more positive, to break these trend lines. Because it's like, okay, one good day, what does that mean? We've had that. You want to see something decisive that we're changing back into a positive mode. So whatever you call this market, you need real signs of strength in the market and leading stocks before you'd say, all right, this is a safe environment to be buying stocks.
Right, because otherwise that one day of strength could have been yesterday. And we clearly know that that wasn't the case. But let's take a look at some individual names now, starting with Monolithic Power, MPWR. In the chip sector. Now, Ed, you have repeatedly called this one out as being a very, in a good way, as being a very strong leader in the chip sector. And it really showed its strength today. Some nice support at the 21-day line and was able to close up for the day.
Yeah, it's really nice action here. Earnings came out. You can see this relative strength line. While this stock has been consolidating sort of a little shelf, the RS line just kept on moving. And today it's skyrocketed. Tremendous earnings, several quarters of accelerating growth. They beat views. If this would be the kind of situation, if the market turns and it cleared this consolidation here, this little consolidation, that'd be a place to add or start a position. It's just, you don't know what's going to happen. I mean, so a lot of stocks have held up, and then they start to crumble. A lot of stocks have good earnings and either pop or hold up. And then after those earnings are passed, they start to fall with the rest of the market. So this looks great. It should definitely be on your watch list. It's in that data center group, but right now it's just definitely watch, don't touch.
And we usually call NVIDIA one of the leaders in the chip space. And I mean, there's no doubt the strength of its fundamental story and the huge gains that it's had this year. But there's now a difference between how Monolithic Power is acting and how NVIDIA is acting. And I agree with you, Ed. I think MPWR is definitely one for the watch list right now. And let's take a look at some rare strength, why don't we? In Ultragenyx, ticker W, why did I say W? RARE. That stock had a gain of almost 6% today and heavy volume at that.
Yeah, this one is a company that focuses on rare or ultra rare diseases. It's generally not profitable. Had profit a couple of quarters ago, probably some milestone payment or something, but tremendous revenue growth, really strong strength. It held up in the buy zone after breaking out, had strong earnings. It held up when it had a secondary offering, and today it actually moved higher. In a normal market, you'd be saying, well, you could buy this because it's clearing this little consolidation above the official buy point. It's out of buy range, but this is a new buy range in here, buy point here. But you just can't feel comfortable. I mean, yeah, this might work. Maybe the market turns on Monday or very quickly, but but it's like, even if this one goes on and you'd have to let it go, that's probably the smart strategy, but definitely want to be watching in the future for sure.
Yeah, especially because that relative strength line, I mean, for Monolithic Power as well was very strong, but this one looks almost vertical to me. You know, it's just extremely strong. We like focusing our watch lists on stocks that have these relative strength lines that are spiking to new highs while the market is heading lower. Those are often the stocks that are leading the charge higher once market conditions improve.
Absolutely.
All right, everyone. Well, just to kind of wrap things up, next week there are some uncertainties out there, namely the election on Tuesday. And Ed and I have discussed at length before how you really need to be flexible. There are multiple scenarios that could happen. Clearly, the market is not an environment right now where you do want to be aggressively buying stocks. And we talked also at length on IBD Live this morning how if you're following proper sell rules, the market should be quote unquote pushing you out. I think that's the phrase that Arusha was saying. If the stocks that you're holding are breaking below key support levels or round tripping, and even if not, you may want to consider trimming your gains and making sure they don't evaporate. We've been taking a defensive posture over the last couple of weeks, and it just seems like right now, with so much that could be happening next week, investors may want to see how all of that shakes out before getting more aggressive in the market.
I think that's exactly right. And even if you weren't paying attention to the market, but you were focusing, following your sell rules, you should be getting out a lot. Now, the market would inform you, yes, you really should be getting out maybe a little bit more if there's any ties, what you should do. But just that alone, so hopefully that's going to pull you out. The thing is, if you build your watch list, this might turn around quickly. What you were saying about relative strength lines is great. It's always nice if you find relative stocks like Monolithic that are setting up and also have great RS lines, but put in stocks that may not have the rated buy points, but have really strong RS lines because you don't know how long this is going to go. This might go for a few days, but it might go for several weeks. And the ones that have strong relative strength throughout the bad periods are likely to be leaders when we do clearly have a decisive move higher.
Yes, that's right, Ed. And we're going to remain vigilant and flexible as well. Like you said, we may see a quick turnaround from here, or we may see a prolonged downturn. We're not sure yet. Our job isn't to predict what is going to happen. It's to interpret what is happening in real time and then kind of pivot from there. So we will continue to do that, not only on this show, but all of our coverage over at investors.com and on IBD Live as well. Our daily morning live stream, our experts are sharing their screens, talking about portfolio strategies and how we're handling the market and stocks that are setting up. So we hope you join us Monday morning on that show, investors.com/IBD Live. Thanks for tuning in, everyone. And we'll see you right back here on Monday.